Am I audible? Am I audible?
Yes.
Okay. Okay. A very good morning on behalf of Capexil. A warm welcome to all of you. For this training sessions on how to fill the RoDTP annexure for revision of RoDTP rates. The RoDTP scheme ensures that the exporters receive the refunds on the embedded taxes like central, state, and local duties. Currently, the RoDTP RoDTEP rates are reviewed on the annual basis to make necessary changes. The government has framed the new committee for the same. Recently, the committee had an interaction session with all the EPCs. I had participated in this meeting in the Delhi. They have requested data from all exporters to assist in the rate fixing process. The committee is aware that the exporters are facing, the high tariff in USA, the largest market of their exports, and hence they have promised that they will do the justice to their work, and a fund is not a problem for the same, since many of our exporters does not know how to fill this annexures correctly. So we have with us Mr. Sudhakar Kasture, an international trade consultant having experience of over 4 decades in foreign trade policy, procedures, World Trade Organization, free trade agreements, custom regulations, SEZ regulations, non-tariff barriers and export incentives, etc. He is director of Helpline Impacts Private Limited and Exim Institute. He has been an advisor and consultant to many big companies and also been associated with various other export promotion councils in India. I'm sure you will benefit from this session. Now we look forward a session from Sudhakar sir. Sir, over to you, sir.
Yeah. Morning, friends. You can see the screen.
We can see, sir.
Yeah, and my voice is audible
Yes, yes, sir.
enough.
Yes.
Yeah. So, friends, today's agenda is we'll talk about 5 things. One, we'll talk about basic concepts of RoDTP. Then we'll talk of elements of taxes and basis of calculation. Then we'll also talk of annual returns complete details, because these annual returns for 23-24 gives a very elaborate explanation of what actually is required by the committee, then why details are required by the government, and then practical tips for filing the return. That is how I'm going to give you a complete idea of this whole subject, and probably will take about 1 hour 30 minutes, and then 15-20 minutes we can ask. If you have any questions, I would be able to reply them. So first part, let us begin. Understanding of taxes. Why am I saying this? Please understand, when the original announcement was made about RoDTP, a lot of people believed it is, since MEIS is withdrawn and RoDTP is being introduced, it is a scheme equivalent to incentives. Whereas the scheme is not equivalent to any kind of incentive. It is actually refund of taxes which are not otherwise refunded to you. So in the system, if certain taxes are already refunded, they will not be taken into account for calculation of RoDTP. The taxes which are not otherwise refunded, they will be taken into account for the purpose of RoDTP. When it was MEIS was purely an incentive. You export the goods, I give you 2%, 3%. Whatever is your FOB value, I will credit that much amount to your account, and that you can utilize for payment of custom duty. It was purely an incentive. This particular case is not of incentive. Please remember this clearly well. So we must understand first the taxes, second the implication of taxes, third the refund of taxes, and then we should come to what is RoDTP. So first tax that we all come across is customs duty. So when we are talking of this, please remember we are talking only of indirect taxation.
Road.
The second tax is goods and service tax. The third, taxes not subsumed in GST, like electricity duty, mandi tax, stamp duty, etc. Central excise duty and VAT on petroleum products. So the taxes totally, if you look at, you have custom duty. Is it refunded to you? Is there any mechanism available? Yes, it is called duty drawback. Do you have any possibility of refund of goods and service tax? Again, answer is yes, because you have input tax credit and you also have rebate of taxes. When you import the goods against advance authorization, you are not paying any taxes, any GST. You're not going to get credit. You export the goods under LUT. There is no question of taxation at all. Taxes not subsumed in GST. Of course, yes, these need to be refunded back to you, because the principle of export is we export goods and services. We do not export taxes, and rightfully so. And the fourth tax, that is central excise duty on VAT, because petroleum products are kept out of the purview of central excise duty, and therefore this is a separate tax. Central excise duty is levied by central government, VAT is levied by state government. There was somebody has raised the hand, but let me tell you, let me complete this. You register all your questions and I will answer them one by one when we complete this, because many of your questions would be answered in the presentation itself. So the question is, the amounts but are not refunded. What is refunded cannot be considered once again in RoDTEP. What is not refunded can be considered under RoDTEP, and this is something we have to understand critically well, because a lot of people still believe other than taxes anything can be remitted back to you. Answer is absolutely no. Technically speaking, those are not covered under the scheme of RoDTEP. And therefore, if you understand the taxation, you must understand three issues: the term remittance, the term incentive, and the term costs. When it comes to remissions means refund of taxes. If there is refund of taxes, then there is no question, and I differ with the government on this particular issue. There should be RoDTEP scheme, for a simple reason that if you are refunding the taxes, taxes are already collected by you. When you are giving incentive, it's money that is required to be created. But when taxes are already collected, where is the question of requirement of funds? Tomorrow, if government says that you have paid income tax and there is income tax refund due to you, but I have no allocation, so I will not give you refund. Nobody of us is going to accept this. My first difference is this, that there is no need of allocation of funds for the remission scheme. If allocation is done, it could be technical from the government point of view. From the exporter's point of view, if I have paid the tax and you are refunding me the tax, you should not tell me that there is no availability of funds and therefore I cannot refund the taxes. If you cannot refund the taxes, that increases my cost and my product become uncompetitive. Ultimately, I will lose export. The second term is incentive, which is purely a contribution by the government It is something like, if I want to equate in today's situation, it should be something like PLI, Production Linked Incentive Scheme. What are the two primary things that are given to you? You get the investment from abroad, you increase the sales on the basis, only on basis of these two things. I do not talk of taxes at all. I simply say, if you increase the sales, desired sales, and simultaneously, if you get foreign direct investment into the country, I will give you extra amount of money, which is not forming part of any kind of taxation, that is incentive. The third term is cost. What is most relevant for any exporter is cost. Why? Because you are trading, you are exporting goods. While you are exporting goods, you are competing with number of countries. You are competing with other developed countries. You are competing with China. You are competing with other Southeast Asian countries, Caribbean countries, African countries. Everybody has a structure on its own and everybody has a cost on its own. In order to become successful in international market, you have to be competitive. I'm not saying you sell the goods at a cheaper cost. No, I'm saying you have to sell the goods at cost, and therefore you have to compete with other countries. If your cost calculation is inclusive of embedded taxes, you cannot be competitive. And that's the reason why RoDTEP has been introduced, so that your cost become competitive. Any tax which is embedded into the cost should get refunded to you. That's how the whole idea exactly works on this particular aspect. So is RoDTEP incentive? No. Is yes. If RoDTEP is not adequate enough to neutralize the impact of indirect taxation, then my product will not remain competitive, so it matters. And it's a remission scheme, so it is directly related to the indirect taxation. Having understood this, let us look at, as far as remission is concerned, there is a mechanism for refund of basic custom duty called drawback. Drawback is not an incentive. Unfortunate part is this in India, and I'm saying this since long experience, 40 years plus, people always believe drawback is an incentive. If you go technically, drawback is refund of custom duty. Drawback does not include IGST because you have input tax credit available. So drawback cannot be treated as an incentive. As far as GST is concerned, you have option of input tax credit. Alternatively, you can claim refund of GST because exports are treated at zero rated. Again, technically, government has made sure that exports are zero rated. The supply, the word in GST that we use is supply. It is a zero rated supply. And there is a logic behind it. When I export the goods, duties are supposed to be paid by the importer. An importer is not an Indian person. His country will levy duties. Duties are always based on consumption. And that is why if I import machinery from Germany, I do not pay German taxes. I pay Indian taxes. Similarly, if I export goods to Ethiopia, Ethiopia will pay Ethiopian taxes, not Indian taxes, and therefore remission has to be done. GST has been legally treated as zero rated. However, there was no remission mechanism for electricity duty, stamp duty, Mandi tax, central excise duty, VAT on petroleum products, etc., etc. And therefore, these costs got embedded. As such, there was need for remission of these taxes. Why? If you don't give the remission scheme, they'll get embedded into the cost, export product becomes costly. Hence, this new scheme is of remission and not an incentive. Even today, people believe. And if you ask me very seriously, any reciprocal tariff imposed by Mr. Trump on Indian origin goods, if you look at technically, it cannot be sorted out in India. It is its choice. The way, if I increase basic custom duty on a product, America can't help. If America imposing reciprocal duties on Indian goods, Indian government cannot really solve the problem. Just think of a case. If a product is subjected to 50% extra duty in USA because product is of Indian origin, do you think RoDTEP can be given to you to the extent of 50%? Answer is absolutely no. So, is it a relief for reciprocal duty? Answer is no. Can you change the reciprocal duty because you think so? Reciprocal duty is a subject matter of Supreme Court of America. If Supreme Court tomorrow decides that the law under which reciprocal duties have been imposed and the executive order passed by Mr. Trump is not legally valid and Mr. Trump has no right to impose this, calling it national emergency, then it's a different story. He will have to withdraw, or his people complained about taxation. And if you see the way American president is acting, and only one thing I can be certain about it is that he is absolutely uncertain. He has removed duties on beef, some other food products, because there is internal pressure. So imposition of duty in country abroad. What is the way out? The way out is you enter into a bilateral trade negotiation, sign and free trade agreement, and subject to condition get the duty concessions or exemption. America has again a different story. They used to they used to offer us a benefit called GSP, Generalized System of Preference, which was unilateral benefit granted by USA to Indian origin goods. But Mr. saying that India is one country which offers a lot of export subsidies, they are not supposed to do that, and therefore they charge very high duties. And he always used to claim Harley Davidson, the motorbike, where India is charging duty more than 100%. So he always used to put that India is charging this duty, very high duty, and therefore, sorry, I do not want to give you GSP like benefit. GSP benefits stands withdrawn. 2019 onwards, we are paying normal customs duty on Indian origin goods in USA. If this is the case, can it solve the reciprocal tariff problem? Answer is no. Can the rates be revised? Answer is yes. Why? Because if all taxes have not been taken into account, if details are not available with Government of India, if people have not understood the concept and not given the proper details, and if any tax element remains embedded into the cost, to remove that, rates can be revised, which is perfectly legal. RoDT scheme, therefore, if it is based on actual remission of taxes, is WTO compliant. Then why this exercise? Why everything is going on? There are reasons for it. So let's understand them one by one. So what is remission of duties and taxes on export products? It is a remission scheme which gives refund of embedded taxes which are not otherwise refunded in any other manner. Be very particular about this particular sentence. If you are getting the same taxation refunded by any other scheme, then you cannot claim that once again. Not possible. You will have to look at this aspect very, very carefully. So what are the normal consideration of taxes under the scheme? The first is petroleum taxes. Why? because they are not covered under GST. Central excise duty and state VAT on petroleum products. Please remember, petroleum product is utilized in two different ways. One, petroleum products like diesel or CNG, PNG, etc. can be utilized for generation of electricity, where you have captive power generating unit or you have a power generation plant in your factory. So whatever taxes paid on that have funded to you. Secondly, some petroleum products which are subjected to excise duty or state VAT are used as raw materials for the purpose of manufacturing of derivatives or end products. So energy consumption or actual consumption. One aspect. Second aspect is far more critical. That is excise duty and VAT. Both are heavy duties. If you put together, it would be almost same like custom duty and IGST. Somewhere it might reach 20%, 25%, 30%, depending on, because central excise duty may remain common, but state VAT differs from state to state. So where you are from where, and you don't have direct details available. The third aspect, which is very critical in this, is transportation. Transportation, 98% of industrial transportation is still dependent on fossil fuel, either high-speed diesel or gas. And again, if you are consuming high-speed diesel or gas for the purpose of transportation of your goods, then there are two issues. First issue is calculation of these taxes. Second issue, toll tax. Toll tax is also tax. You have to compulsorily pay it. And this amounts pretty large. And then there are two issues involved: inbound transportation, outbound transportation. Most of the people do not have details of this. They have details of total cost. Their transporter has given them details of, okay, one 40-feet container or 20-feet container coming from port to the factory, in factory to port, definite distance, definite cost. But when you are buying your raw material components from local vendors, then what are the charges? How many people have their own transportation vehicles? How many people depend on the third party? And in any third party quotation that is given to you, nobody mentions what is the cost of diesel or petrol. Even if you go to the petrol pump and take the bill, it gives you a bill. It doesn't give you breakup of taxation. These are all practical issues. So petroleum taxes is one of the major issues in calculation of RoDTEP. Electricity duty in products like ceramics. The cost of electricity duty is pretty high because the electricity consumption cost in ceramic products is close to 30%. Just think of, even if you are paying 10% electricity duty and your total electricity cost of manufacturing, if I want to calculate it with reference to the value. So petroleum products and electricity duty, these are two very critical aspects. Third is related to farm products, where mandi tax, that is also quite a huge tax. Then transportation, where GST on inputs in the transport for which you do not get credit, those kind of things are covered. Then toll taxes are covered. And stamp duty on export related documents. Again, there is bifurcation of stamp duty. You acquire a factory In that you paid stamp duty. Is it refundable? Answer is no. That has been made clear by first committee, which was appointed for fixation of RoDTEP rates. So all these have to be calculated based on the product. Then you work out the average value. And then on the basis of average, the rates are fixed. Are they going to match with each exporter's actual expense? Answer is again no. Because I may be exporting the same product for which average FOB cost remains the same. But distance of my factory from the port is different from my competitor. My competitor is 50 kilometers away from the port. I am 100 kilometers away from the same port. Another fellow is 200 kilometers away from the same port. Another fellow is 300 kilometers away from the same port. Each one will have calculations of what is the amount of taxes that they are paying. And therefore, there is no methodology available for individual. It has to be average. It has to be based on averages. That point has to be understood very, very clearly. Practical implication on my product is not average. It is the actual cost I am paying. And just think of a situation. Somebody, let us take a port like Chennai. If you are traveling a distance of 900 kilometers to reach your product by transportation, so 900 kilometer practical running of the container, the cost of petroleum products and the tax calculation on that is completely different from a factory which is 100 kilometers away from the port. Again, there are two ways: inbound transportation, outbound transportation. When it comes to inbound transportation, procurement of the material from different vendors, those different vendors are situated in different states. How do I calculate? There are furthermore problems. Some people store the goods in the warehouse, and from warehouse they transfer it to their different factories in different states. If I have three different factories, one is close to Noida, another is close to Mumbai, third is in Gujarat, fourth is in somewhere close to Chennai. I'm going to choose the ports which are closer to my. Again, there is one more problem. Even if I choose the port closer to my destination, the quantity being consumed of a raw material may not be adequate enough to import at that particular port. So I import a container at some other port, then take the product to the warehouse. Depending on my requirement, I distribute to my own plants. For every plant, calculation will be different. These are complex issues. I have done a lot of projects for Export Promotion Council, so I can tell you, when I used to interact with people, it is very difficult to get the details from manufacturers. For a merchant, it is absolutely difficult because they completely depend on the manufacturer for details. If manufacturer is not prepared to give the details, you cannot really submit the data that is required. And the data calculation that was required was very large. Most of the people did not have documents. There was another problem that you want data to be certified by CA. And when it comes to transportation, you don't have any kind of taxes or a bill certifying the taxes. All you have is a transportation bill that from port to my factory, 15,000 rupees I have paid for transportation. And maybe by taking advantage of technology, I can collect toll taxes. I know how much it is. But other than toll taxes, it is not possible for me to identify what is the actual petrol cost, because that depends on the vehicle, that depends on the n number of issues connected with practical operations, the routes, etc., etc. So the rates were fixed on the basis of average. That has happened in the first place, 2019 onwards. Scheme implemented from 1st January 2021. Notification 19 was issued on 17th August 2021. This is also very interesting thing. You announced the rate in August, but they were made applicable from 1st January. HS codes and specified rates sufficient enough for claiming the benefit because it was a duty credit. And though the scheme was announced under the foreign trade policy, the entire implementation of RoDTEP scheme is with customs. With effect from 5th of March, RoDTEP was made available for SEZ EOUs and advance authorization exports. I had objection to this right from day one because advance authorization doesn't grant me any relief from petroleum taxes or electricity duty. Advance authorization grants me relief from only custom duties. It has nothing to do with taxes covered under RoDTEP scheme. So why advance authorization holder or EOU cannot avail those benefits? That was a question being discussed for a pretty long period of time. Finally, when it was announced, there was a different rate compared to rate available. Even today also, the rates are different if you are availing. But 5th March 2024, these people also came into coverage of RoDTEP. Now, there are some additional points that we must note, and this comes out of Circular 23/2021. Duty credit allowed under RoDTEP scheme is subject to realization of sale proceeds within the period allowed by RBI. In other words, the comparison of RoDTEP is done with drawback. The way you don't receive the foreign exchange realization within specified period of time or extended period of time, government can ask refund of these. They said if you do not receive money, then same principle will apply for RoDTEP. Drawback was refunded in cash. RoDTEP is given to you by way of duty credit. So it's a e-script. So you'll have to either surrender the e-script or you will have to look at how do you solve this particular problem. The regulations read with the said notification shall provide for situations and manner of suspensions or cancellation of duty credit or e-script or recovery when duty credit allowed was in excess or where export proceeds are not realized. Very few people read this, but it has long-term implication. In other words, the return you file and the amount you claim does not match with each other. Then in that case, there is a possibility of recovery. And that is where the new system came into, where government has asked for filing of annual returns for the year 2023-24 that give us the complete details of taxation that you have paid and the remission that you have claimed. If remission is more than the taxes you have paid, there is already a provision for recovery. The wording is very clear. When duty credit allowed was in excess or where export proceeds are not realized. Where export proceeds are not realized, there this is understandable because you have not received foreign exchange, export obligation per se is not completed and therefore the money which you have claimed has to be refunded back. But how do you use the word excess? I have claimed the RoDTEP because government has announced the rate. After announcing the rate, after I have claimed, then you are asking me details of it. And if it is found excess, you have given me the rate. What government is going to say? Government is going to say, we calculated the rate based on averages. Now we are asking you complete details. And in details, if I find it is so, I'll recover the money. There are good enough examples in legal situation also. The only possibility of comparing this situation is with drawback, but the problem with drawback is completely different. For a drawback, it is refund of customs duty, and customs duty is duly certified by the government on your bill of entry. So establishing correlation is only the problem with the exporter, otherwise nothing else, because he has a fixed document. In this particular case, the embedded taxes are based on assumption. I may not have the exact document to prove. And with my mechanism, if I'm not able to establish the proof, there is a fear. There is a fear of recovery of RoDTP. If that is the case, it will become a very, very serious problem. First, it was only a thought. Then government has introduced that, okay, for 2023-24, file the returns. And they have given a format for filing the returns. If you carefully read the format, I'm going to show you the format. You will understand how many details are to be provided, how they are to be provided. First, government introduced a date, then they increased it by another 3 months, then another 3 months. Finally, they increased it up to 30th November 2025. You have still few more days to file those returns. But please file those returns. Check. Upgrade your system if required, because otherwise there is a fear of recovery at a later date. At present, it is limited only to those people who have claimed during 23-24 or whose entitlement during 23-24 is more than 1 crore rupees. So all small exporters are not yet subjected to that, but bigger exporters are definitely subjected to this, and you are supposed to file those returns. And most of the people, because I have been dealing with industry, so I know most of the people do not have the understanding. Becomes a very, very serious problem. So that is something one has to understand. And therefore, am I audible?
Yes, sir.
Yeah, no problem. Okay.
Yeah.
So that's the question. How to answer that question, how to reply that question, we'll have to think about this. Then there is a question, why these audits are being asked? So what are the challenges? Understand those challenges also. EU has objected to RoDTP scheme as according to them, it is not actual neutralization of taxes. For actual neutralization, you require actual details like fixation of brand rate, actual bill of entries where payment of duty can be identified item wise. In the case of RoDTP, the taxes involved calculated based on actual quantity or value of exported product. This is extremely difficult as you do not possess the documents of actual taxes. One good example, the taxes paid on diesel required for transportation if you are using third-party transport. The third-party transporter will only give you bill of total freight. Even if you ask him 100 times, he is not going to give you on which petrol pump he has filled the diesel or gas and what is the actual taxes he has paid on them. You know what is his worry? Suppose he quoted you a figure of 18,000 rupees and his actual figure of diesel is coming only to 6,000 rupees. Then his fear is you may start negotiating with him once again. You may tell him that your diesel cost is less. I will not pay you so much of rate. Why should I pay you? His calculation of business will go haywire. He is unlikely to give you. What is the option left for you? Just think of situations. You are close to Goa. And VAT in Goa is less compared to Maharashtra state. So where the truck fellow will feel like having diesel, having petrol, in that place where VAT is less, but transportation is going through Maharashtra state, reaching JNPT, n number of problems of this sort. Then in chemical industry, there are more problems. Raw materials cannot together because they interact with each other. Think of this. I give you a 5-liter can and I ask you, go to the market, get 2 liters of milk, 1 liter of kerosene, another 2 liters of groundnut oil. Though you have the capacity of 5 liter, can you bring them in one container? Answer is no. So when you are buying different raw materials from different vendors, your transportation cost goes up. Every time your tanker may not be 100% filled, you'll have to pay those. Every sector of the industry has different calculations. Chemical industry cannot bring raw materials together because they interact with each other. Automotive industry can bring components together because they don't interact with each other. I can have gearboxes and steering wheel simultaneously in the same truck, no problem. There is no disturbance as far as transportation of those goods are concerned. In chemical industry, that is another serious problem. But the problem came because you said, no, this is, on one hand, you say it is remission of taxes, on the other hand, this is average. And if it is average, you cannot say it is actual. Then what happened? US and EU contend that this scheme does not align with the rules prescribed by WTO. And therefore, US imposed CBD, Indian file folders, rejecting arguments from the Indian government regarding the WTO compliance of RoDTEP. The EU similarly concluded that certain graphite electrode systems from India were subsidized through RoDTEP, leading to imposition of countervailing duties. While the monetary impact of these levies may not be substantial, trade experts emphasize the need for India to be prepared for a more extensive battle. This being the legal case, now there is another problem. To solve this problem, government has said, okay, how do I prove that I have examined the details and their actual neutralization? So they said, those who have claimed more than 1 crore rupees in RoDTEP, ask them to file the returns. And ask them to file the returns duly audited by chartered accountant. If that is done, then I can submit those documents as a proof to EU or to US that look, this is what we have done, this is scrutiny we have done, and therefore whatever rates fixed, they are taken care of, and therefore they are compliant with WTO. So far there was no audit system. The audit system, if you go back, way back, 20 years back, similar query was raised with reference to advance authorization also. That you fix the wastage norms, you don't revise the wastage norm, you don't calculate the wastage norms, and wastage norm therefore amount to some sort of an incentive. Again, there was a query at that particular point of time, and examination was carried out. Same thing is done in this time also. So government is preparing, and the first step of preparation was 23-24 audit that was completed, and therefore exporters were asked to file the returns. Again, if I ask you very serious question, how many people have filed these returns? Lot of time has passed. Not everybody will say that I have filed the return. I'm 100% sure of this. Then there are people, they started fearing, particularly those who have claimed higher RoDTEP. Now they start thinking that if there is a recovery, and it has n number of complications, please understand. Just take one example case. Suppose your RoDTEP claim of last year is 4 crores. 23-24, not last year. 23-24 is 4 crores. And practically you can prove that you have paid taxes only 2 crores. Then as per the regulation of the government, what should be done with balance 2 crores? Should be recovered from you. If it is to be recovered from you, are you prepared to pay 2 crore rupees back? There are further calculations. If this has already been taken into account in your balance sheet, on that you have already paid income tax. Are you going to get back those taxes? These are all very serious issues. And therefore, this has to be understood carefully well. Do you have an obligation to file the return? Yes. Then people started asking question that what about 24-25? So I have to reply them. So far, no notification has come from the government for submission of filing of returns for 24-25. But 23-24, the date is extended up to 30th November. If you have not done it, please do it quickly. Complete it before. And it is applicable to only those people who are having more than 1 crore. So at least wherever you have taken RoDTEP benefit more than 1 crore, please make sure that you file the returns before 30th November. What are these returns? Because why I want to explain you these returns, because these form the base of the new committee. You must understand what they are so that you understand what details you have to collect in order to make your representation for the next year. After 31st of March 2026, if you want RoDTEP scheme to continue, this is critical part for you to understand, and this has been explained in details. Therefore, this has to be taken into account. So let's look at some of these points. From 1 to 8, very easy for you to fill in. Name of the manufacturer, type of unit, IEC, HS code of export product at 8-digit level, quantity unit code, complete address, etc. All this you can do. The real thing starts from export clearance of goods. Now in the audit system, they have said quantity of product exported during 1/4/2023 to 31st/3/2024. Please remember, follow late export date, because that is registered with customs. FOB value of product exported during 1/4/2023 to 31st/3/2024. Again, shipping bill, late export date. Whatever invoices you have made during that. And please remember, it is not necessary that you have received those claims, but eligible claims, eligible shipping bills take into account. Period of export, 1/4 to 31st/3. Now start your headache. And now starts detailed explanation. Serial number 10, cost of inbound transport. Read every single word very, very clearly. Total VAT paid on transportation cost actually incurred with respect to process of procuring raw materials, consumable spares for manufacture of exported product, inbound transportation by road. First part. Second, total excise duty paid on transportation cost actually incurred with respect to process of procuring raw material, consumables, spares for manufacture of exported product, inbound transportation by road. Same 10C, but the difference is you are taking it by rail. And 10D, again by rail. 4 elements you have to calculate. Inbound transportation, total VAT paid, total central excise duty paid by road. And if the same goods are coming by rail, then what is the excise duty and what is the VAT paid when the transportation is by rail? Now, if somebody asks me a question, who will give me a certificate when it comes to rail transportation? That what is the cost of diesel you used and what is the taxation paid on them? Which station will give me this? Which ICD fellow will give me this? Nobody is prepared to give you these details. Same story when it comes to transportation by road. Who is going to disclose? Who is going to give me the authentic documentation? Then, suppose you are buying raw material locally. Then the question comes, how do you go about it? How do you go about it? If your vendors are located at different places, how do you keep account? How do you maintain? How do you look at it? You will have to create these details, analyze these details, and find out on the basis of the kilometer and the kilometer rate. That's the only option you can find answers to this. So when this question was raised with Government of India has agreed and they have issued instructions that you can take this by way of assumption. However, appropriate assumption. Now tell me, if you are procuring goods by road from port, it is imported material. Then how do you go about it? So you calculate the distance, because distance is something you can calculate. It is not a problem. So I am bringing 20 metric tons of imported cargo from the port to my factory. Distance is say 120 kilometers. And if I know that average kilometer rate per liter is say 3 kilometers or 2.5 kilometers, then I can take into account that, okay, 120 kilometers divided by 3. So 40 liters of diesel. On 40 liters of diesel, this is the amount of excise duty. This is the amount of VAT. Again, throughout the year, diesel rate is not going to remain the same. Please understand this carefully. Even if you want to work on assumption, the only option available to you, work it on the basis of average rate per kilometer, maintain the distance absolutely correct so that it becomes authenticated, and then you explain it to government that this is the average rate of transportation. Based on that, this is my cost, this is my diesel cost, or this is my CNG, PNG, whatever you are using, that is the cost. And based on that, this is what is the duty calculation that I have given. And then it should match with your total purchases. So it's a huge way of working on it, detailed working on it. When it comes to by rail, there are two more problems. One, who is going to give you the details? Second, if the rail is running on electricity, then what is the electricity duty that is paid by the central government? That has to be calculated. Both these have to be done on the basis of assumption. There is no option. The more of number of vendors that you have, your problem increases more. You think of, you are consuming 10 goods in manufacturing of a product. 3 are imported, 7 are locally procured. 7 which are locally procured are procured from 10 different vendors. So you have to keep a track of what is 10 different vendors, and it should justify with your billing. Whatever you might have done, you'll have to work out a formula. Based on that formula, you have to calculate the diesel cost. Then you have to calculate the cost of VAT and calculate central excise applicable in that particular state. And based on that, you will have to work out what is the situation. Recently, I came across a case. The factory is in Div and Daman. Electricity duty is 0. This is my plant is there and my material is coming from the port. So as far as taxation, electricity duty paid out of question, then my rate is 2%, but my actual calculation of taxation is coming only 0.10. Great worry, how to do? These points have to be understood. Same story applies 11A, 11B, 11C, 11D. Only difference is outbound transportation, factory to port or factory to warehouse, warehouse to port. But same problems you are going to face in calculation of taxation. That has to be looked into carefully well. That has to be seen carefully well. There is no other option. So 11A, 11B, 11C, 11 11D. Same way it goes. Comparatively, you have less problem in calculating electricity duty. Why? Because you have electricity duty bill with you. Per month you are paying XYZ amount multiplied by 12, total electricity duty you paid, and simple calculation you can do. What is the percentage of export in production? If you have exported 60% of your production, 60% of electricity duty you can say is utilized for export. If you are exporting 20% of your production, 20% of total electricity duty you paid during the year can be treated as a cost of electricity duty for export purposes. So purely based on working of these. Again, there are complications if somebody wants to go into details. What is the actual consumption of electricity? If you are manufacturing different products, some may have less consumption, some may have more consumption. If you want to be more specific, look at that. And it's a critical exercise. Even if government permits these calculations, still please remember, how will your auditor certify this? How will your chartered accountant certify this? You'll have to give him some proof of it. Then there are different kind of problems in transportation, further problems in transportation. What is the size of cargo that you are bringing? Somebody brings a tempo. What is the cost involved? Somebody brings a truck. What is the cost involved? Somebody brings 20 feet container. Somebody brings 40 feet container. Somebody has 40 feet refrigerated container. Everywhere cost will differ. Transportation cost will differ. Electricity cost will also differ when it comes to transportation. Look at that. Stamp duty paid on relevant export documents or relevant bill of entries where you paid stamp duty and those materials are used in the export production. You can take into account that will be the exact figure. Only you will have to establish the correlation. Does it include stamp duty on office or those kind of things? Sorry, no. So far, it is not considered as a product specific. Therefore, establishment, wherever you have paid stamp duty on establishment purposes, that will not be taken into account. Somebody has asked a very interesting question. I should tell you, there has to be some laughter also. This is, look, I have a factory, 100 people come and they use vehicles, two-wheelers, three-wheelers, whatever. So whatever diesel taxes paid for their coming to the office and going back to the home shall also be calculated as embedded tax. Government clearly said no, that cannot be considered. Only directly related cost to the production can be considered. So stamp duty, then fuel used in generation of captive power, total VAT paid on fuel, total excise duty paid on fuel, then embedded CGST, embedded SGST. This is another funny aspect. Even from a service provider, people want GSTI and registration. Are you likely to buy goods from unregistered dealers, particularly exporters? Maybe 0.1% people in India might have bought this. So this really doesn't make sense. It's a very small amount, very, very small amount. But then that is also included, and any other taxes paid with justification. So if you have some local taxes which you have paid, Give the justification, include that. One interesting aspect, this has to be calculated based on inputs. Incidence of taxes, duties, levies borne by the export product on account of prior stage cumulative taxes. Prior stage cumulative taxes. I bought a raw material from XYZ. That raw material has been imported. He has also incurred electricity duty, he has incurred VAT, he has incurred central excise duty. Give the calculation of that. Item wise. The first question is, prior stage manufacturer, is he prepared to give you these details? If not, how will you calculate? If your product is consisting of 10 different items, how do you calculate? Big question mark. Government wants these details because they want to prove to rest of the world that this is actual neutralization of taxes. So that is second issue that has to be considered and looked into. How will you get this? And if it is inclusive of good profit margins or minor profit margins, is the person prepared to cooperate with you? Because this is prior stage, what from somebody else? This is another issue. 21. Indicate any exemptions, concessions with reference to fuel taxes, stamp duty, electricity duty, any other taxes. Those details have to be provided for. Total taxes, duty, levies paid on exported product during the period 1/4 to 31st 3. So consolidated figure. Total accrued RoDTEP 1/4/2023 to 31st 3/2002. Please remember the word is accrued, not necessarily claimed. What is due to you? RoDTEP rate given for the exported product. What percentage of FO value accounts for taxes duties? Comparison of accrued RoDTEP with total taxes duties paid on exported product. And then remarks. Let me give you a probable thought process. If you are crossing 80% of the RoDTEP rate, your rate may not be disturbed. But if your actual taxes payment comes only to 50% of what RoDTEP you have got, then yes, it is likely to be questioned. And you may be asked to refund it, I don't know. I am nobody to comment on it, the government will ask refund or not. But the instructions issue has these parameters given, and enough legal evidence is available under the earlier schemes where something which is not due to you or given to you by whatever methodology can be called back. So you will have to look at this. This itself forms the requirement. The new committee appointment and the new things that are getting added, whatever may be the language, it is based on these parameters. Some additional taxes. If you realize that there are some additional taxes which are embedded into the cost not refunded by any scheme, you can include them. That will happen. That has to be seen how it practically goes into the details. Now let us come to new committee. On 1st October 2025, order has been passed by CBIC for constitution of RoDTEP Committee 2025 under the chairmanship of Neeraj Kumar Gupta, and the members are Mr. Barua, Principal Chief Commissioner of Customs and Central Excise, and Mr. Vivek Ranjan, member CBIC. Both are retired officers. So the actual calculation of this committee, the looking into details, and this includes two types of remission schemes, RoSCTL, which is for textile products, and RoDTEP for other products. In other words, officers who are ultimately going to check these details are revenue officers. Please remember this word carefully. Why revenue officers? Because they understand the implication of taxation. This has to be read through in details. So I will go over para by para. To interact with administrative ministries, export promotion councils, commodity boards, trade bodies, other stakeholders, to elicit their views on ROSCTL and RoDTEP rates for exports by domestic tariff area, export-oriented units, special economic zone units, and exports under advance authorization. My observation on the first para is you should vehemently talk that whether it is advance authorization or UU scheme, it does not offer me any concession of duties other than custom duties and IGST. Therefore, RoDTEP should be applicable the way it is made applicable to DTA exporters. First point. If it is SEZ or advance authorization holder, again, advance authorization holder doesn't get any exemption from petrol, diesel, etc. So the only possibility of getting more benefits is for the SEZ. Maybe local taxes are exempted. So if your unit is SEZ and local taxes are exempted, then they should obtain a specific clearance from the state government instead of the exporters that what exemptions are granted to SEZ units. And then minusing that, you can fix the rate for SEZ unit. This is because legally SEZ is an area where you are allowed to procure goods without payment of taxation. If you read the SEZ policy carefully, it also indicates state SEZ policy. If state SEZ policy has given concessions on local taxes, VAT particularly, then that can be excluded, that percentage can be excluded. Otherwise, for all other categories, there should not be any difference in the rates. Second, to work out the modalities for calculation of duties, taxes, levies at the central, state or local level borne by the exported product, including prior stage cumulative indirect taxes on goods and services used in the production of exported product, and any such indirect duties, taxes, levies in respect of distribution of exported product, and recommend in their report the ceiling rates under RoCTL and RoDTEP schemes. The committee may take into consideration the incidence of such duties, taxes, levies for all categories and other relevant factors as deemed fit. I have two questions on this. I'll ask them subsequently, but I'll just make a remark for that. In respect of distribution of exported product, what exactly you mean by distribution? And when the committee says other relevant factors as deemed fit, what are those relevant factors? Are you going to say that you are going to refund me reciprocal taxes imposed by USA? If that comes under other relevant factors, I have to think about it. Again, product wise, it will differ and it cannot be made applicable to all exports. It will have to be made applicable only to US exports. So you'll have to have a different rate of RoDTEP for exports to USA if you are taking into account the relevant factors as deemed fit. Please again remember, increase in freight rates, there is no relevance. Reciprocal duties, currently no relevance. Increase in cost, no relevance. Taxes, by the definition of the scheme, only taxes which are embedded into the cost of the product have to be taken into account. Otherwise, it goes outside the terminology of remission. Then you can create some other different kind of incentive, and that's a different story. But you cannot just include anything and everything as you wish. If you go by the legal terminology. If you don't go by the legal terminology, different story. Point C, to give supplementary report recommendations on issues or representation, if any, arising after notification of the revised rates consequent to the report of the committee. So this is a bureaucratic way that first we'll declare the rates, and then if you have still certain problems, we'll reconsider them. To examine D, to examine whether any further modifications are needed in the existing rates or caps for items covered under the RoDTEP RoSCTL scheme and the drawback schedule which have undergone change, either in description or customs tariff heading, consequent to the changes brought about in the customs tariff schedule with effect from 1/5/2025. In simple terms, in the amended schedule or in the prescribed schedule for RoDTEP, if there are any changes in the HS codes because of revision of HS codes, those corrections also have to be taken into account. And if anything that is impacting which requires modification because of the maybe exchange rate fluctuation, anything that you can think of which is relevant to this subject, to that extent, amendments can be carried out. Value cap can be increased. This particularly happens when it comes to products like gold and silver jewelry, where the basic rates have changed to a great extent and therefore taxation might have changed. Value cap will have to be changed, etc., etc. The committee will determine the methodology, decide the modalities of holding deliberations and meetings with the stakeholders, conduct field visits and study specific production processes as it may consider necessary. Suggested ceiling rates as part of the report provide documentation and calculation or worksheets. The committee will submit its main report to the government by 31/3/2026. Revise rates under the RoDTEP schemes respectively, keeping in view any post-notification issues. So this will be applicable for 26-27. You still have time. But I am 100% sure by then, committee will also have access to returns filed by those people who have claimed RoDTEP in 23-24. So there will be some documentation available. Probably whatever new they require may come in the month of December after they study whatever the reports that have been filed. Appropriate studies have taken into account then. But these are practical issues that you will have to look into. What are the expectations from the new committee? Let's look at that. While the entire exercise, these are my comments, what I have learned. While the entire exercise is a welcome step, there are still several areas that require proper explanation and clear directives from the committee. For example, the phrase, such indirect duties, taxes, levies in respect of distribution of exported product. I have questions. This needs further clarity. What exactly is meant by distribution of export product? Inside India, outside India? Second, is this phrase referring to activities related to free trade and warehousing zone? Because by definition, supply to free trade and warehousing zone is export. But actual exports for consumption abroad takes place when goods practically leave from the free trade warehousing zone and go to another country, crosses the country's border. If that is the situation, are you saying if there are any taxes applicable during that period, that will also be considered for the purpose of RoDTEP? There is a third question. Is it related only to FTWZ located in India or outside India as well? Because technically speaking, when I make consignment sales, I store the goods abroad. They are not practically sold. There is a new problem likely to come. For consignment sale, earlier time period was 15 months. Just now, RBI has allowed time period of 15 months for regular exporters. So are they going to extend the time period for consignment sales, let's say from 15 months to another 6 months or up to 2 years? We'll have to see this. There is no clarity so far on this issue. I can understand pre-trade and warehousing have some additional taxes to be paid. That has to be taken into account or not. Could be a subject matter of the government body or the committee that is going to think about this. Those questions have to be answered. Similarly, the concept of studying specific production processes. First question is why? Why you want to study production process? What is the logic behind it? I really do not understand. You are only talking of taxation. Now, this might be a case where you want to reduce the standard input output norms given in the policy because of development of technology, and therefore total material cost goes down and therefore your transportation cost goes down to some extent. The question is how serious is the effort? How much will it impact in terms of the rates? Suppose, let me give you a simple idea that today your rate is 0.7%. Suppose it becomes 0.68. Will it matter for the exporter? Will it matter for the government? I mean, exercise matters for this kind of very small changes. Can exporter be not trusted for his production process? They're all questions. How do different production processes impact remission or non-remission of taxes? Can you apply the same rule to MSME as you apply the rule to MNC, who is technologically much advanced compared to MSME sector? So should we reduce the rate for MSME, different rate for more efficient production processes, possession of more efficient production processes? Then how do you collaborate this? How do you work out one single rate? If you believe that you want to work out one single rate, then will it be justifying for all exporters? As it is, if you go by the actual calculation, it will not justify. Within the same MIDC, it will not justify. If the area of MIDC is 50 kilometers or 20 kilometers, the factory which is close to the gate and factory towards the far end will have different transportation cost. These are practical issues. How are we going to look at this? We also require clarity regarding different rates applicable for DTA, advance authorization, UOU units. Because for them, embedded taxes remain the same, they don't change. Their exemption is primarily on account of IGST and basic custom duty. These two were never the part of RoDTEP scheme in terms of thinking. So this will also have to be looked into carefully well and understood as to how we are going to look at this. What are the challenges? Limited rate revision in certain tariff lines. You have no scope to increase. How to go, particularly those products which are made with, say, two raw materials and a simple process. What are the chances of revision? Pending clarity on retrospective claims before June 2025. That has also not come through so far. because you have discontinued the scheme and then you again started it. So how to look at that? Need for a faster refund realization for MSME exporters. This problem is probably getting solved with some new initiatives by RBI to some extent. Interest subvention scheme, if it employed well, then yes, to that extent it will reduce some burden. Standard procedure or methodology should be followed for the major calculations under the scheme, and government should come out with this. My way of thinking is little different, and I would request Export Promotion Council to take up this issue. Can you not calculate the rate based on distance and say that for this distance you take this rate? Can this not be done by the government in the first place? I'll tell you why I'm saying this. Central excise rates are with the government, VAT rates are also with the government. Diesel consumption, some way or the other, average rates, you have your own studies. Why can't you come out with one standard figure, maybe a state-wise standard figure if the VATs are different, that this is the amount per liter or per kilometer you have to consider as cost of taxation? Then the verification system becomes very easy because you have GPS. Put the GPS, find out the distance between two places, multiply it by the rate, your whole problem is solved. This has to be emphasized on government that give us these details first. Otherwise, individually, if you want to calculate, then it's a huge procedure. It's not easy for anyone to operate on this. Collection of details, calculation of details, yes. It's a time consuming process. In spite of all this, you may not have exact details. So how do you go about it? This is how one need to understand and solve. Government should come out in. Then it becomes very easy for me. If I am procuring 5 different raw materials and I know this is the distance for this particular raw material, this is the quantity I am purchasing, I just multiply this and work it out. Then it's calculation for me, no problem. But if you do not want to do this, it becomes a problem. Let's come to few more recommendations. Request multi-year rate stability, policy predictability. Every time I'm not sure whether budget will be there, whether I will get RoDTEP next year or not. If you want to make it a remission scheme, make sure that yes, this is the rate that I'm going to give you. If there is revision, before the rate is announced, before the time is announced, before expiry, I will announce the rate, make an amendment, give you a new schedule. But predictability has to be there at least for a period of 5 years. Inclusion of logistics and port related levies. Any surcharge, tax or levy, in my opinion, if it contributes to the government revenue directly or indirectly. Why I'm saying this? I'm looking futuristic. When you have a project which is public-private partnership and you are paying money to the entity under that public-private partnership, but part of the money, directly or indirectly, is going back to the government kitty. If this is the case, that should be considered. You should not say, this is a levy charged by XYZ, therefore I will not calculate in embedded taxes. That has to be taken into account. And irrespective of what is a state levy or a central levy, as long as the exporter has paid it, it should be considered. There should not be allocation of funds for this particular purpose. You sort out problem between central and state government the way you want to sort out. Why exporters should suffer on that account, that who has collected these taxes? Who is contributing to these taxes? You give me a definition of contribution to the government. Whatever is collected, that portion can definitely be refunded back because it is exports. And in the long run, the industry must work towards proposing practical implementable solutions, keeping in mind that RoDTEP is a remission scheme, not an incentive or subsidy scheme. ये प्रॉब्लम मैंने अब मेरी जिंदगी में कई बार देखे कि सर इसका ड्रॉबैक बढ़ा दो। फिर दूसरा सवाल मैं पूछता हूँ, अच्छा इंपोर्ट क्या? नहीं सर इंपोर्ट कुछ नहीं, फिर ड्रॉबैक कैसे बढ़ेगा? If you consider legality, drawback is refund of custom duties, and you are saying no imports, then how can I give you? Is drawback an incentive to give you more money? No. Therefore, industry should talk only on implementable issues, practical solutions. If that is done, lot many problems will get solved. Will it happen? Will it not happen? Big question mark. And some recommendations I will show you. RoDTEP remains the cornerstone of India's export system, support system. Reinstatement of all categories boosts sectoral parity. Exporters should utilize benefits through proper documentation and ICE gate claims. Continued engagement with government and industry will ensure RoDTEP success. You want RoDTEP success? I'll give you one answer, one simple answer. Bring electricity duty, mandi tax, diesel and petrol, excise and VAT under GST. No need of RoDTEP at all. I will pay, I will claim. Input tax credit matter ends. It is that simple a solution. The question is, will government agree to bring diesel, petrol, petroleum, all 27, chapter 27 products, removing central excise, bringing them under GST, bringing electricity duty under GST, and giving me input tax credit? If that happens, my problem will get solved. Question is, will this happen? Will this not happen? Big question. I really don't know. This could be the way forward looking at it. But if you want a practical solution to this, as I said, the rate per kilometer, government should come out. This is the central excise, this is the VAT use. Because distance is something which I can guarantee can be calculated correctly without any problem. Government can check it because they have location of each one. That is also not a problem. To a great extent, containerized movement can be tracked. That is also not a very big problem. Local transportation, buying from local people, becomes a very huge calculation. But then, as a government policy, if we are talking of Atmanirbhar Bharat, then local procurement will increase. If local procurement will increase, you'll have to come out with a suggestion, with a simple module, simple methodology of calculating. Because the backbone of RoDTEP, the majority contribution of RoDTEP comes out of only two levies. The first levy is transportation and second levy is electricity duty. If this can be practically followed, yes, we can think of a better future and we can think of some definite remission of taxes. However small it is, 1%, 0.5%, 2%, whatever it comes. And like in ceramic products, it may be higher because consumption of electricity is higher. There will be some specific cases where duty rates will be higher and therefore remission rates will also be higher. That has to be taken into account carefully then. So here, my suggestion comes to an end. So in conclusion, exports are zero rated. Therefore, all embedded taxes should be refunded to the exporter. There is no question. The issue is currently difficult as taxes like fuel taxes, toll taxes, electricity duties are not subsumed in GST. So simple answer is subsume them in GST. Moreover, the VAT rates of fuel differs in different states. Again, there is a calculation problem. The best option, therefore, is to bring these taxes under GST, provide input tax credit that will solve the problem permanently. And there is one more very important aspect of this. Such an arrangement will also give immunity to government as input tax credit cannot be considered as an incentive and therefore will not attract any action under the anti-subsidy or countervailing measures of WTO. Because the way abroad VAT is charged and you get the credit, same thing will apply. Nobody will be able to question you on this particular issue. It will save further litigations, things like that. So all that will happen over a period of time. Depending on how industry supports, how industry bodies take this, and how governments accept these. This has to be seen, looked into carefully, understood carefully, worked well. You will have to work hard because this will, even if we wish, this is not going to happen in a day. And the last date is 31st March 2026. We have to submit details as quickly as possible. Annual returns must be filed before 30th November. Considering all these issues, you will have to take quick action on this. It's my habit to give a thought at the end of any presentation that I make. So today's thought is, and all my thoughts come from Zen Buddhism. I always say this, there are reasons for it. One, Buddha says you are responsible, no God. He doesn't pass on your responsibility to someone else. And second, Zen Buddhism talks of precision. So if you combine both, today's thought is peace comes from understanding and accepting that which is. So accept you have to work hard, no options. Understand all the problems. I have tried to explain whatever is connected with RoDTEP. And I hope this will help you understand. Thank you, Kapexik, for giving me this opportunity to talk to you. And I hope this presentation will help you understand the nitty-gritties of the scheme, future direction, and how to practically work on it. So thank you so much. If you have questions, I would answer them now. Please, somebody put that into chat box. Repeat it to me. I will answer.
Thank you, sir. Thank you for your detailed presentation, sir, on the RoDTEP. I would request the members to please raise your hand and ask question one by one. Sir will answer this question. You can simply raise the hand and ask the questions. If not, there are a few people who have given the question in the chat box. I'll read it out, sir.
Yeah.
Mr. Sunil Malhotra says, though you have given all the challenges, how we can, how one should consider the inbound and, outbound transportation charges. He says, uh, he's asking, one second, his name is chat. Yeah. Sir, how can we, this is Mr. Sunil Malhotra. He's asked, sir, how can we calculate tax paid on transportation?
I said that you calculate per liter cost based on the kilometers. Let's take an example. You are bringing 10 metric ton material and the approximate rate is 2.5 kilometers per liter of diesel. Now you exactly know 2.5 kilometers. So distance from your factory, from the factory to your factory, let's say local transportation is 250 kilometers. So 100 liters of petrol is diesel is required. 100 liters of diesel. Calculate what is the VAT. Calculate what is the central excise duty, and that would be for 10 metric tons. If you have purchased 1000 metric tons during the year, multiplication, you will get the exact figure. And you write there, this is based on assumption. What is the assumption? The truck will travel 2.5 kilometers in consumption of 1 liter of diesel. That's the way that can be calculated. And let me tell you, government has already agreed to such things, because when they issued instruction for filing the revised returns of 23-24, they said very clearly in the instruction that you can do it on assumption basis. Because otherwise, you have only freight bills. You have no document which says this is the amount of diesel we filled, this is the tax we have paid. Because 99% is third party transportation. You have only the total bill.
Okay, sir. We have 2, 3 more questions. Then we will give
Yeah.
the chance to people who are already raised the question. And now there is one question from Genesis Babru. Says that total accrued means the RoDTP script total or total as per the HS code. Total accrued means the
No, no.
RoDTP script total or the total as per the HS code.
Total as per the HS code. You might get the actual script later on, but that is due to you.
Okay. And it's again from the Genesis Bablu, and she says that Himedia Laboratories is a manufacturing firm. Which option should we use, DTA or advanced authorization or SEZ or export-oriented units?
No, it depends on which shipping bill you filed under advance authorization, which shipping bill you filed under TTA. You will have to give 2 statements in such circumstances.
Okay. Mr. Mahesh Kanduja, he says, Dear sir, this is Mahesh Kanduja from Sakat INX. Please advise from where to get diesel rates for the period involved and rates of taxes involved. Also, how to get the electricity duty on containers railed hour from ICD to port, as ICD are not ready to share the same. Should I read it again?
I agree. That is what I said, that you are not going to get it from them. What is the option left for you? Is calculate based on assumption. For running those many kilometers, how much you require and what is the generation cost of that and how much is the taxation cost of that. Based on that, you calculate.
Okay, sir, Mr. Manoj Kumar is asking for the presentation. Definitely, sir will sharing the presentation. We will send you all the participation, the presentations. The next question is from Meena. Sir, I am from HLL and I'm only filed the RoDTP return for the year 2023-24. I have to manually input all the detail line by line to complete and file the return. It took 2 weeks from me to finish and submit the return. Is there any provision for exporting Excel file with the correct data as part of return filing?
If it is systemic problem, submit anything that you wish. Today they want data to be submitted. Submit Excel file, submit anything, put it anything as annex here and submit.
Okay. And Mr. Amit Jain, he's saying 30th November is the last date for filing financial year 2024-25. He's asking this question.
There is no date announced for 24-25. No returns are asked even today. This was asked only for 23-24 and the date is extended up to 30th November. 24-25 wait. This is the first case of examination. If they are happy, they may not ask for further, or if they want this to be continued, then the notification will be issued to that effect.
Okay. So there is one question from Subhash. Sir, what is the criteria to file return for session April 2023 to 31st March 2024?
Last date is 30th November.
No. He's asking what is the criteria to file return for session so and so 23-24. Okay.
Only those HS codes. Okay, tell me how much RoDTP 23-24 your total entitlement is. Figure. How much you have claimed. If it is more than 1 crore, select only those HS codes where the total amount of RoDTP is more than 50 lakhs. If you have only one HS code, you may be exporting 20, but one HS code crosses 50 lakhs file. If you do not have, whichever is the highest, say 40 lakhs, 30 lakhs, file only for that. That is given in the instructions. Please read them carefully.
Okay, sir. I think there is no more question here, sir. And I think 2, 3 people have raised the hand. Mansivar, can you see who is the person who raised the hand? Can you just read their name? I'm not able to see here.
Yes, sir. Let me check. Sir, Mr. Amit Jain has raised his hand.
Yeah, please, Mr. Amit Jain, please go ahead. Ask the question. Mr. Amit Jain? Okay, okay. He is asking for the PPT. Fine, definitely
For
we'll
the
share it.
presentation.
The next one,
Yeah.
just read the next person's name.
Sir, it is Italica Granito.
Yeah, someone from
Yeah,
Italica Granito.
Lomesh is here, sir. Good afternoon.
Please go ahead. Yeah.
Am I audible, sir?
Yeah.
Sir, I calculate the transportation cost like my transportation cost is 1 crore, and I assume that the diesel cost is 50% of transportation cost. So it's a 50 lakh of diesel cost, and on that I calculate the excess and VAT. So is it okay, or I should go with the
I
kilometer
don't think
cost?
so. No. You go better with kilometer, and you take some letter from your vendor who is giving you transportation, that what is the average cost that works out. You'll have to have some supplementary document with you. Pure assumption in this way will not work.
Okay, sir. Okay. Thank you. Thank you, sir.
Yeah. I'll tell you what is the fear in the whole situation. The fear is this, that if there are 5 exporters and if they have quoted completely different rate compared to you, then you'll be questioned how come you have arrived at this rate.
Yeah. Okay, got it.
Okay.
Yeah, Mansivar, anyone else?
No, sir. That's it.
Okay, we don't find any question in the chat box as well as no one has raised the hand. If you have anything, please share. Please ask the question. Sir is ready to answer the question. I think that means we don't have, shall we get return format? Okay, somebody is asking, Mr. Subhash is asking, shall we ask the return format? Return format is already we have
It is
sent you,
available.
sir. The council has already sent you the annexures, sir. Return format is basically annexure, no, sir? That we have already sent you, sir. We will definitely send you that if you want it. And there is no further question. So I would ask, Mansimar Beti, young professional of Capital Delhi, to give a vote of thanks.
Thank you, Danan, sir. On behalf of CapExcel, I extend my sincere gratitude to all our members for joining today's session. And a special thanks to Mr. Sudhakar Kasture for sharing his expertise and guiding us through the process with such clarity. So it was a very detailed presentation, and we appreciate your time and your valuable insights. CapExcel remains committed to empowering our members through such knowledge sharing sessions. Thank you once again, and we look forward to your continued participation in our future programs. Thank you.
Thank you, sir. Thank you so much.
Thank you.
We'll be sending this
you.
PPT to all, sir. Thank you. And
Sure.
even this
I'll
has
send
been,
it.
with the entire video also been recorded. If someone wanted to see later also, they'll be able to see this, sir. Thank you, sir. Thank you.
Thank you.